My name is Chris Bird, and I'm a certified CRS RRC instructor, and I'm going to be coming to North Carolina in early April to do a series of seminars that I want to tell you about. I'm going to be in Outer Banks on April the 3rd, and I'm going to be in Raleigh the following day on April the 4th. And those 2 days I'm going to be talking about our new tax strategies for the real estate professional. This is a course that Dale Carlton and I wrote, and basically what it does is it encompasses the Tax Cut and Jobs Act of 2017, and we've broken it down into basically 3 categories. It's a wonderful one-day course. So the first segment of the course talks about the effect of this new tax law, which really hits the 2018 return first. And those are the returns that people are filing right now for the next 3 or 4 months. But first we're going to talk about Schedule A of the tax return and how the mortgage interest deduction has been changed, especially for those of you that have clients in very high value areas. We're going to be talking about the new SALT limitations, the state and local tax limitation of $10,000. And in many parts of the country, that's going to have some pretty major impacts on whether people can itemize their deductions or whether they're going to now claim the standard deduction. The second part of the course talks about the tax write-offs, the enhanced tax write-offs for the owners of both residential rental and commercial real estate properties. We'll talk about the fact that NAR and RPAC fought heavily, significantly, to keep the 1031 exchange for real estate alive, which they did, and how that was not kept alive and how they've taken away the 1031 exchange for trade-ins of vehicles, cars, SUVs, things like that. So that's the second segment of that course. And in the third, which is the real meat of the day, we're going to be talking about what happens to your own return, whether you're a sole proprietor, whether you're an S corporation, whether you're an LLC, whatever. What are the deductions that now apply to you? For example, the most significant new deduction is what's called the qualified business income deduction. This 20% deduction of your profit if you qualify. And all businesses qualify, it's just there are limitations based on certain professions and things like that. So I need to teach you about how you calculate that 20%, and believe me, realtors qualify for it. Well, on that deduction, we have final regulations issued by the IRS on January the 18th of 2019. And in those regulations, they also gave us information about how Schedule E of your tax return works with that new 20%. So I'll be covering all of this. And finally, I'll be talking about the new depreciation rules. What can we take in terms of bonus depreciation? What can we now do with 179 deductions? We'll be talking about the new rules for entertainment, the fact that many forms of entertainment are no longer deductible, but we can take 50% of our client meals and things like that. And then what I want to do is share with you some of my thoughts as to how we can move some of those non-deductible entertainment expenses maybe over to promotion or advertising or something like that. So I really want you to consider coming to see me either on April 3rd or April 4th. Again, Outer Banks and Raleigh are those 2 locations. Now on the 5th, I'm going to be in Charlotte doing a one-day version of our CRS 204 course, which is buying and selling income properties. And again, this is a really, really good course. A lot of you have taken this with me over the last several years, and I've been in the Carolinas a lot teaching that course. Your instructor is a heavy, heavy, heavy real estate investor. My wife and I buy or build every year. In fact, we drove by yesterday one of our new builds, and basically it's under roof in the last couple of days. So I want to talk to you about what you need to look at on buying residential rentals. How much rent versus cost per square foot? Where's the location? Who's going to be your tenants? What are some good return on investment, return on equity numbers to use? And in that day course, I'm going to provide you with spreadsheets to use, computer spreadsheets, to help you evaluate a given property, whether it's a good investment or not. So again, I'm going to be making a run through the Carolinas on the 3rd, 4th, and 5th of April. Come see me in one of those 3 locations. I guarantee you it's worth the money to attend. Thanks. Hope to see you soon.